I do have a question about tax loss harvesting. You said you'd have to create a really big loss in order to write it off.
Right. So how it works tax loss harvesting now this is just obviously in theory. Let's just say you buy Coke, right? And the Coke stock goes down, right? And let's just say you have a $10 loss, but it's unrealized until you sell that position. So you sell that position and do a like kind investment. So let's just say Pepsi, right? We realize this, so we sell it. Now, there's also other nuances, but like a wash sale, they could even buy the same stock. They just have to wait 31 days to buy it again. So they may do that. Now, this is just in simplest form. So let's just say I buy Pepsi, right? And then Pepsi later on goes up by $10. And maybe Coke also went up that same amount of time. But I have unrealized gains, or better said, I recouped my losses from this. But the only thing that really matters is realized losses, right? So when you have your 1099-R, which shows the capital losses, it'll show a $10 loss. It won't know any of this because it's all unrealized. Mm-hmm. So that is how tax loss harvesting works. Now, to your point, for a client that needs losses to offset a lot, you have to have a lot in there, and you don't want to try to do this yourself. You want a portfolio, portfolio designed with tax loss harvesting strategies. But remember, you typically have to have either 500 to $1 million minimum ready to invest in order to realize losses to that 300,000 to 400,000. And it's you got to know the right specialist, right, that know how to incorporate a strategy like this. There's always risk, right? And here's the other thing, you want to make sure all of this aligns with your investment goals too. At the end of the day, we want to save on tax, but not at the sacrifice of wealth. So that's why tax loss harvesting in this way can still grow your investment, unrealized gains. Now, later on, we may have ways where it's like, all right, we have all these unrealized gains. Do we want to liquidate them? How do we do that strategically? For right now, we just need to focus on how do we offset that capital gain through a tax loss harvesting strategy. But again, if you are cash poor, none of this will work, right? So you have to be able to mitigate tax with your wealth strategically. So it's important to know this. I can very easily create a plan and say, hey, do tax loss harvesting. In fact, we had somebody, right, that was like, hey, I got a plan from another tax planner. My CPA doesn't know how to implement it. Do you guys know how to implement it, right? It's so easy to say, hey, here's some ideas, here's some concepts, here's some theories. And most of it, I would say, is solid. It comes to like, okay, we've seen these in court cases that they will fly through an audit. It's just, how do you do it? That's the most complicated part.